And in technical analysis, next in the list is candlestick patterns. In candlestick patterns, I'll suggest you study these patterns that I'm going to give you. One is a doji pattern, which indicates a reversal, and another one is hammer or a wick reversal candle. There will be a wick on the downside and there will be a body like this. This is a wick reversal candle, and there can be a wick on the upper side. This is a hammer or wick reversal candle because the shape will be like hammer, and a doji candle is simple. It will be like this. And one more thing is inside candle. One more bar is inside bar. There will be a bar like this, either that is a red or green. If it's a red, the inside bar will be green. It is not able to break the previous candle's low or high, and it will be inside. If the previous candle is a green color bar, and the inside bar will be here on the upper side. I hope the concept is clear. Next is the opposite of this candle, engulfing candle. There will be a candle and it is going to cover up this candle. That means the buyers are strong. If it's a red candle or green candle and the next candle covers up with a green candle, the buyers are strong. And if it covers up with a red candle, the sellers are strong. These are the important candlestick patterns you should learn if you want to become a master in a technical analysis, or if you want to become a master in trading. You need to identify these candlestick patterns. There are a lot of different candlestick patterns. I'll see these patterns as important, and if you want, you can study a lot of candlestick patterns. There are a lot of candlestick patterns. You can go through it. I suggest initially you can study these 4 or 5 patterns, and I created a scalping strategy video based on this inside candle. This pattern is that much powerful, and if you haven't watched, watch that video. I'll provide the link in description. These are the candlestick patterns you should study: doji, hammer, inside candle or inside bar, engulfing bar or engulfing candle. These are the candlestick patterns I would suggest you to study. Next in the list of technical analysis mastery is chart patterns. In chart patterns, you can study a number of patterns, and there are a lot of books. And all these concepts will be covered in one book. I'm going to provide that book on screen. You can buy and read it, or you can download it online and you can read it. That is going to provide a lot of information if you are a beginner. And in chart patterns, first one is consolidation and breakout. Price is going to consolidate in 2 ranges, and it is going to give a breakout either one side, on downside or on upside, and it is going to move 2 times of this range or 3 times of this range. It is going to be possible, and there is going to be a retest as well, and that's a different concept. And there is going to be breakout failure as well. These are completely different concepts, and what I'm telling is consolidation and breakout. That is the first point in my chart patterns list. And another one is a triangle pattern, where it is going to make this kind of moves, and there are different variations to this triangle pattern. 2-3 variations: ascending triangle and descending triangle. You can read about that chart pattern as well. And this is also called as a rectangle pattern or a consolidation. I'll call this as consolidation, and a lot of people will tell you this as a rectangle chart pattern. And the next chart pattern is head and shoulders pattern. It will be like this: shoulder, head and shoulder. And if it breaks on this lower side, the target is going to be the same length as this one on the downside. This is a head and shoulders pattern, and if you reverse it, that is a reverse head and shoulders pattern. These are the 3 patterns you should study, and I recommend don't go complicated in chart patterns as also. Just study simple patterns. This one is highly important. This is a simple consolidation pattern you are going to see every time, and this is one more important chart pattern you are going to see a lot of times. These are the 3 patterns that I am going to recommend, and this one is called consolidation, breakout, or a rectangle pattern or box pattern. If you have read the book by Nicholas Torvis, How I Made $2 Million in the Stock Market, this is a pattern that is discussed in the book. Box pattern, that is called as consolidation and breakout, and another one is a triangle pattern, and another one is head and shoulders pattern. Just study these 3 patterns. If you are a beginner, just go with the minimum concepts. Don't try all of this at once. Go with one by one. First study price action, or if you feel indicators are easy, go with indicators. If you feel candlestick patterns are easy, go with this. If you feel chart patterns are easy, go with the chart patterns. If you do not want to complicate and make it easy, go with this chart pattern, or go with the indicators like moving averages. Then if you practice and if you watch the charts a lot, you can master this price action as well. And the candlestick patterns are also easy, and from my viewpoint, it may be easy. For a beginner, it may be tough to identify these patterns and of these price action techniques. You just go one by one. Don't master everything at once. While recording chart patterns in a technical analysis, I forgot to tell you one more important concept, that is you should learn double tops and double bottoms. What is double top and double bottom is, it may be called as M pattern and W pattern. W pattern on a lower side, price action made a low and it made a high. It made a low once again and it broke this high. It is a W pattern, and this is also called as double double bottom, and this low may be lower than this one, or it should be higher. Basically, it is a price action. It is a low, high, higher low, and it is breaking this high. It is a simple price action concept, and this is called as double bottom and W pattern. And in a double top also it's the same. It is opposite. Price action is going to make a high, and it is going to make a low, and after that it is going to make a lower high, and it is going to break this low. This is a M pattern and a double top. These two patterns you should master, and with these patterns you can find out bottoms and tops in the market. These are going to be very helpful in your trading career. I missed to mention when I am recording that part, so I am recording this separately. If you are watching this video in a technical analysis mastery, this is one of the videos in this series, and you can watch all these videos that are published on my channel. You can just go to the playlist and you can watch these videos. If you want to become a master in technical analysis, watch all these videos and practice in real live markets with a smaller capital. If you are a beginner, practice with a smaller capital along with the risk management. If you like the video, subscribe to the channel and turn on notifications. Thank you for watching. We'll see you in the next video.